please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Alright, I'll come for that many others, but the market's opening flat as flat can get. 8 points down, 9 points down now, 11 down, 13 down. Okay, we should take it as 12 or 13 down. That's 11,364. That would be more or less the opening, and that's 0.1 down. It counts as flat. Sensex now 5 down. So again, pretty flat. It's just losing a little rapidly now, but still it's only 0.1415 down. Nifty Bank as well is not as bad. The divergence is not so much, so it's 0.18 down now. All indices will count as flat in the opening. While it is not a Nifty stock, I'm tempted to read out Bank of Baroda first. I think it is starting with a very big cut of 10%, almost. Closely followed, a close second is Indian Bank, which is down 3.2%, and Canara Bank, which is down 2.5%. So that's the market's way of telling you that these are the three best-run banks in the PSU space, and that's what they want to flee from at this point in time. Dena's up 20%, closely followed by IOB. And the other prizes go to UCO, United, Bank of Maharashtra, Central. You don't want to be in the green list today. You know what the market's verdict is when you're in the green list. Only Vijaya puzzles me, continues to be about 6% higher. So I really will have to wait and see what kind of positives the market sees in that. At the moment, actually, the ratios could get a little worse. Now to come to the big boys, and the Nifty is still flat. The guys who are in the green and pulling the index up, HUL up 1.8. So clearly the management stock has impressed investors. DRL, Sun Pharma, so basically pharma stocks. The top 5, of the top 5, 3 are pharma stocks. DRL, Sun Pharma, Lupin, all up about 1%. Tata Steel is also up about 0.9, almost 1%. And then there is the odd IT stock. HCL Tech actually has started in the green. On the day its buyback starts, it's up 0.6. We'll have Rima come and explain the math. Hero is up 0.5%. Titan, Yes Bank, Adani Ports, all of them up about 0.5%. So what's the red brigade? Tech Mahindra is down 1%. Actually, most of the tech stocks are down as the rupee strengthens perhaps. Tech Mahindra, Wipro, TCS are all in the red, about 0.5% to 1% each. Tata Motors is also in the red. Ultratech Cement, Axis Bank, ITC, Eicher Motors, HDFC, the oil marketing companies, those are the red brigade. That's it though, but all of them minor percentages. Midcaps is showing more green.
Yes, the mid-cap is having a better showing, up 60 points. The market breadth is good. 830 stocks on the advancing side. The pocket that's gaining this morning is Pharma. So not just Aurobindo Pharma from the frontliners, but Strides, Ajanta Pharma, Natco Pharma, Lupin, that Cipla, that whole lot is up about 1 to 2%. I remember Sudarshan was making this point that, you know, there's more to go in the pharma names. So keep an eye out on that. On the downside in the banks, apart from Bank of Baroda, you mentioned Indian Bank and Canara Bank. PNB is also down almost about 1%. You have BOI that showcased a bit of pressure. So keep an eye out on some of these names. You know, the possibility of more aggregators or some of these banks becoming aggregators in futures cost some money to move out there. Consumption stocks are under a bit of pressure this morning. Bata is down about 1% Havels is also under pressure, down about 1%. KC International, etc. are names that are coming in for profit taking. But now the market has flattened out completely. And if you're looking at the frontliners, just watch out for tech stocks. Wipro, Tech Mahindra, TCS are all down about 1% or so. Yeah. So on the market itself, Anuj, I mean, it's consolidating for now after that big fall yesterday. But you get a sense that there could be more pressure?
You know, my eyes are firmly on Bank of Baroda, and you know, if you shorted this morning, you are stuck, and badly, because it opened 15% lower and it's now down only 7%. Just see the intraday chart, and you know, they were shorting earlier. So what you'll have today, just pull out the intraday chart on Bank of Baroda. What you'll have right now, intraday, intermorning, is a powerful short covering move, which you know, it's open at 116. You shorted at 116, you're gone, because you know, this most of the news perhaps was baked in. The stock was close to 52-week low, and now that stock is seeing recovery. Having said that, of course, on the market, it's a decent start, but the Bank Nifty is still under a bit of a pressure. The Nifty is up 13 points. Let's see if it can sustain. Advanced decline has started well, though. The mid caps have done well. Ashwani, thoughts on opening and any trade that you're taking here?
Get long on Bank Nifty, you could have a 100+ point move. whatever had the bad news is hitting highs of the day. So today, private banks are also coming back. So Yes Bank, Kotak, HDFC Bank, etc. So wherever there is bad news, the opportunity is there, and the market is not reacting poorly at all to this banking news. And chances are people are stuck on shorts on Bank Nifty from yesterday, today morning. That should lead to 100, 150 point move on the upside.
Yeah, Bank of Baroda is recovering a little more now. 6.9 down.
Yeah.
So clearly the early morning shorts are not working for Bank of Baroda. It's fallen much less than perhaps people, the markets thought. Now Vijaya is getting into the red. It started off actually in the green with 3%, but now I saw just perhaps a little bit of red on the Vijaya share. Okay, no, sorry. It was only a red band. It's still in the green and actually doing very well now, 8% higher. So somebody is looking at Vijaya very, very positively. Sudarshan, anything now on your radar?
Yes, the Nifty has crossed 11,400, the cash index. Let it be here for a couple of minutes. If it holds on, we go and buy the Nifty. Then we have Dr. Reddy's as a buying idea and Tata Motors as a short sell.
Okay, well, for now, you know, the markets are moving up higher. Also, across the globe, there is a recovery. Anisha very helpfully points out that the Japanese market is up 350 points right now. The Dow futures are down just 25 points versus a 100-point cut earlier in the morning. So across the board, there's a bit of a recovery that we're seeing, and our own markets also following suit. Mitesh, any first thoughts on the market opening? Decent start. Stocks like Yes Bank, HUL, Dr. Reddy's are rising. What would you pick to trade?
Yeah, I think, you know, FMCG still looks better placed compared to the banking lot. I still am not very convinced about the banking part, but I think Dabur, I think, looks good for me, good to me for a trade. Amongst the exporters, I think HCL Tech and Pharma names remain my pick, and that's where we are trading. And on the Nifty, I think I would wait for the markets to get past 11,430 before getting aggressive on the long side.
Okay, Ashwani, what's the big call for the day then? Buy into financials?
Big call happened in the morning. I mean, you can't, you know, get up 75 points later. The point was to buy it when it gapped down and started to move up sharply. Now it's a bit late, but my sense is that private banks want some decent short covering before they are ready to sell again.
Okay. The insurance companies have been actually taking it on the chin. HDFC insurance should come for your ICICI, okay. I would prefer if maybe we took a 1 week or a 1 month of these stocks, and you will see the pain over there. SBI Life also is indicating that, and so is HDFC and ICICI Pru. Anything in these stocks, Sudarshan, that you would go for a short?
No, I wouldn't go for a short today. And ICICI Pru is weak, but it's not the day to go for short positions.
Okay, just pull out the intraday chart of Balrampur Chini. That's the one which is now out of F&O ban. Now it looks like some perhaps reversion to mean. So after 2 or 3 back-to-back good days, you know, first sign of some profit taking in Balrampur Chini. I think we were discussing with Mr. Tulsian as well yesterday. He was making it a point that, you know, perhaps now is a good time to book some profit in these stocks because they've run up a lot. Led by Balrampur Chini. So that's happening for now. Let's take some more thoughts before we move on. Oil marketing companies are again making highs of the day. Ashwani, BPCL yesterday ended at the highest point. As we speak, still up a bit more. Any thoughts here?
These are just contra trades. As long as, you know, crude is a little soft, rupee kind of appreciates. Other than that, there's not much. But because the market tone is on the upside, you may get a decent day. But I think banks should give you the bigger trades today because that's the, you know, kind of a circuit where the shorts are there. HDFC Bank, particularly 1980 is the 200-day moving average. I mean, as much as you hate financials, at the 200-day moving average, you may get some respect for HDFC also. I think financial should pick up as the day goes by.
Also, there's a trade playing out in JSPL, so don't lose sight of that. It's actually broken out of its 3-month trading range. It's, of course, been moving higher since the month of July. But now JSPL, if you just pull up a 3-month chart, you'll see it's sort of broken out. Sudarshan, any thoughts here on, you know, some of these metal names that have been picking up lately?
No, it's not a favorite for me, JSPL. I think we should just let it be. JSW Steel is much better.
Okay, okay. Well, Prakash, I wanted to ask you, where do you stand on the insurance companies?
So I continue to believe it's difficult to evaluate their business models on a very shorter time frame, but I would buy a basket of them, 2 from the life insurance side, maybe 3 from the life insurance and 1 from the non-life, and then sit tight on this for a few years, and that's where you would make some decent amount of money. But on a shorter term basis, these fluctuations probably are just buying opportunities because the business model doesn't change so frequently for them.
Okay. Thank you very much for that, Prakash, and thank you very much for joining us this morning as well. The Sensex, Nifty and Nifty Bank are all up 0.25%. The mid-caps are up almost 0.5% at the index level. And the advanced declines are 2 in the green for 1 in the red. Last thoughts before we thank you, Ashwini. Still good to go long. You said that people would have missed the best opportunity. But on Nifty, can you still go long?
The first 15-minute bar is a fairly large bar, both on Nifty as well as Bank Nifty. Nifty, it's almost, I think, 45 odd points. So today looks like a day where, some amount of shorts may be there, but everything is, couple of hours at a time. Okay. So what applies in the morning may not apply in the afternoon.
Okay, well, gentlemen, thanks for joining us. The market has opened fine after that big gash of 500 points on the Sensex yesterday. This morning, there's a 100-point recovery that you're seeing on the Sensex, that is. On the Nifty, as you can see, up about 30-odd points. But it's a good day to be talking about upsides, perhaps. Morgan Stanley has raised their September 2019 Sensex target to 42,000 on expectations that the bull market will broaden and that growth will pick up in the coming quarters. Here's more from our chat with Rhythm Desai, the head of India Equity Research of Morgan Stanley.
I think India is on a growth recovery path, which I think began a few months ago. It's likely to translate into better earnings growth, and I think that's the reason why we think stocks are going higher. We've been in a bull market since 2009. It's been a very long bull market, but it's been a very slow one. We've had several corrections along the way. And I think the bull market is now reaching a stage where it is going to get backed by strong fundamentals. Now, obviously, there are a lot of risks along the way, and I think everybody is focused on those risks, which is usually a good time to actually engage in stocks. When people start disregarding risk, that's when I think you get worried. But for now, I think growth is looking good, likely to surprise on the upside. The profit share in GDP is at near all-time lows. So I think we're going to likely witness a very sharp recovery in corporate profit margins over the next 2 or 3 years.
Rhythm, since it's a one-year target, I'm not speaking about this next 5 years, 20% CAGR in earnings that your report talks about. A 7% growth country like ours, one would expect this kind of growth in the medium term. But next year, we are riddled with some problems. Interest rates have gone through the roof, as it were. 8.2, who would have thought a year ago? Are companies prepared for that? And even the stronger rupee, the weaker rupee, initially will create disruptions, though later on it might be a big help for both domestic companies and exporters. So, do you think political risk as well as interest rate risk can be very big caveats to your Sensex target?
Now, of course, there are lots of caveats, Lata, and I hate to forecast on points and single-digit or single numbers, which of course makes a lot of good media, but is a very bad way of looking at things. It's certainly not a good framework to think about investing in stocks. So the Sensex target is what it is. I don't think we should overly focus on this. But I believe you made some really good points. So let us step back for a moment and think about exactly 12 months ago. If somebody had told you that the rupee will be at 72, 73, that oil will be where it is right now, that the 10-year will be at 8.2, that we will have all this tariff stuff happening around the world, what do you think you would have done with stocks? And that's the point, right? All this is already in the bag. It's already in the bag. We already know about this. Stock markets are forward-looking animals. They've already baked this in the cake, which is why we're getting such a muted reaction this morning to the additional tariff round, because the market already knew that it was coming. So I think I think, I'll make one more comment, which is that the market is usually right. It goes wrong about a couple of occasions out of, say, 20. And when it's wrong, it's essentially either over-exuberant or it's in panic. So we can recall such things quite easily. Jan 2008 was over-exuberance. March 2009 was panic, or in fact all of the end of 08 and early 09 was panic. We had similar panic in August 13. I think everybody can identify panic and over-exuberance. The market doesn't feel like that right now. It doesn't feel like it's in panic or it's in exuberance. So I would argue that stock prices are more accurately reflecting all these concerns than we can actually fathom. And therefore, I wouldn't really worry about these things. I think the stuff that's going to upset the view on the markets or the performance of stocks is something that we actually don't know that's going to happen in the next few months. All the stuff that we know that's going to happen, I think, is already baked in the cake, if I may use that phrase. So yeah, certainly there are risks. I mean, election results can go all wrong for India. We can get a global recession. We can get a mistake by the Fed. We can get mistake by policymakers in India. So many things can go wrong. And that's true about stock markets at any point in time. But I think we have to weigh those things against what could happen to fundamentals, where the valuations are. And I think on balance, it looks like we are in an uptrending market, give or take a few points here and there. And will the Nifty correct over the next few days? Quite possible. But I think over the next year or two, I think it's likely that stocks are higher, not lower.
You spoke about election results briefly, but how do you approach that event? Because if pessimism does rise ahead of or during the election, or with the election outcome, would you still believe that that is a buying opportunity?
Yeah, Sonia, that's going to be a tricky one, because it's very hard to tell how things will pan out with respect to elections. What our historical analysis shows is that it's not the nature of the government, but it's actually the leadership at the top that matters to the economy and therefore to the markets. So we've had fragmented coalition governments in the past, and that's had no impact on stock returns because the economy is done okay. And on other occasions, we have had reasonably strong governments, but poor leadership, and that's hurt the market. So it's not something that I can actually forecast with any accuracy. But I think you make a very valid point, which is it's not about what actually happens in May next year, but what the market starts believing will happen. And that is ultimately what's going to drive share prices over the next few months. So if the market starts getting too pessimistic, then I think it's a buying opportunity. If it gets too optimistic, then I think you sit on the sidelines, especially if you're in the business of timing shares, which I think is the privilege of a very few set of people. But if you get those extreme views that the market takes on the election outcomes, then I think we can ponder about it and make a call on the market. But right now, there is no signal that the market is ready to make such an extreme call. I believe it may happen over the next 2-3 months, but we'll have to wait and watch.
The issue is 70 to 80% of our audience is in that business, right, of timing it. For longest, the trouble with this market was that it was too narrow. There was a handful, just a set of 7 or 8 stocks, the Bajaj twins, the HDFC twins, which was taking the market higher, and the market breadth was getting very narrow. Now we've seen the leadership stocks correct quite a bit. Consumption, for example, has corrected. The NBFC twins have corrected. The retail banks have corrected. Your thoughts on the kind of leadership shift that we have witnessed over the last 3 or 4 months?
So Anuj, I think you've raised a very important point, but I'll make one point. In fact, you've raised 2 points. So let me make 2 points. First, about timing. So again, I'll use another old maxim in the stock market, which is time is more important than timing. And we did this analysis on the Indian stock markets going back 25 years. 100 days of returns account for almost 2/3 of the aggregate index returns. So, there have been about 6,000 trading days in the last 25 years, and 100 days, which is less than 2% of the total time, has accounted for more than 2/3 of the total returns that the index has given.
Okay, that of course was the view from Rhythm Desai. The Bank Nifty is almost about to turn into the red, so let's see, only about 4 points in the green is what you have. Pharma is doing well though, so Biocon is now making highs of the day. Granules India is making highs of the day. So these are 2 stocks where you have seen some gains. And the other pocket which has been gaining ground of late, other stock rather, is UPL. That's also making highs. And really, after a long time, Lever is seeing some bit of uptick, 2% after that big correction that we've seen of about 10 or 12%. Lever is in the green, but Nifty Bank is almost in the red already. And once again, the pressure point is some of these strong, erstwhile strong private banks, which are seeing a bit of a decline right now.
Okay, but I think the stock, okay.
Yeah, the stock of the moment quite clearly is Bank of Baroda. And the markets started off with a 10% downtick and then it recovered a little bit, probably on short covering, but it's gone back to a 10% cut. So market still expressing its displeasure. Let's invite someone who looks at these stocks very closely. Suresh Ganpati, banking analyst at Macquarie Capital Securities, joins us now. Suresh, you've been quite charitable to the action. Would you be as charitable to the stock as well? Would you actually buy Bank of Baroda?
No, of course not. I mean, that is one of the biggest risks in trying to own some of these larger public sector banks, because they are now going to be punished by the government for performance. What is likely to happen is there are 11 PCA banks, out of which one of the PCA banks, Dena Bank, has been given to Bank of Baroda. And there are 10 others left, and what is the future for them? So they will definitely be given to some of the larger PSU banks. So if you are going to be a minority shareholder in any of these PSU banks like Bank of Baroda, you are really going to be heavily shortchanged. But the government also doesn't have a choice, right? So over the next 5 years, consolidation is inevitable. You'll have to bring down the number of public sector banks down to 5 or 6.
So do you, Suresh, hi, good morning. So do you expect further pressure even on names like, say, you know, a Bank of India, Canara Bank, Punjab National Bank, who could perhaps be aggregators in future?
Of course. I mean, what happens also, Sonia, is that the entire management bandwidth goes only in consolidation, right? So you're just now trying to come out of the peak of the NPL cycle, and then next 6 months to 1 year goes only in consolidation. And we have seen that even in SBI subsidiaries, which were supposed to be more homogeneous than any of the other public sector banks, for an SBI fit, it really took a lot amount of time for them to consolidate and also obviously clean up the balance sheet. There were some negative surprises in some of the quarters due to realignment. There will be merger integration costs which will be there. So all these things really makes an investment case for these public sector banks a pretty bad one, to be honest. So clearly I won't be buying any of them now. Except if you really want to punt, you can go ahead and buy the PCA banks who are up 20%, right? Today Dena Bank is up 20%.
Yeah, today Dena, Central, IOB, all of them are up on a similar logic as you are seeing. Suresh, can you run us through how you expect the merger to play? It will be an amalgamation. So this will be a God-given merger ratio which the government puts on the table, and everyone gets their shares swapped in that ratio is for the merged entity shares. Is that how it will play?
See, I don't really think, Lata, the government will go against what the market price is for these entities, right? So the critical point is what is going to be the record date, because now today's share prices have all gone haywire. Dena Bank is up massively, Bank of Baroda is down 10%. So if they're going to do at today's market price, then it's going to be pretty bad. Mainly because BoB shareholders are going to get a very raw deal. So they might have to do it at yesterday's market price, right? So that's or rather Friday's closing market price. So that's the way it would play out. The share swap ratio will be in accordance with what the market price is. Whether they go for a 3-month average or whether they go for a Friday closing number, we really need to see what exactly happens. If they do it on Monday's price, it's going to be very negative for a BoB shareholder.
Okay. Well, you know, while philosophically, you know, it would be far better if the public sector banks had been privatized or the government had gone, you know, the PJ Nayak route or something like that. For the moment, this is all that the political economy allowed them. Is there a price at which you would buy the merged entity? Or is it too early to speak about its ROE?
No, it's too early, Rata, because what exactly happens is that the future ROE trajectory is very important, and now it's very difficult to take a call post-merger what exactly would happen. See, also what has happened, that's what we have written in our report, is that almost 95% of the general managers are retiring in 2020, right? So it's a massive spate of retirements which are likely to see, and therefore we all need to see what the government is going to do with respect to these HR reforms. So the first step obviously is consolidation, and the next step is with respect to human resource reforms, where a lot needs to be done. Unless and until that step goes in the right direction, it becomes very difficult to have a longer term constructive view on these public sector banks, to be honest. Otherwise, 10 years down the line, Lata, I will be discussing the same thing with you. You will be saying, oh, they have gone to 20% NPL, and I'll be saying these things are really bad investment case, right? So we need to see whether there are any fundamental changes which are likely to happen in these names.
Okay, so that's about the PSU banks. But talking a little bit about the private sector banks, what are your thoughts on Yes Bank? You guys did a roadshow with the management, and there is talk that over the next 2 weeks we'll hear the final call on the tenure of Rana Kapoor. How does an investor approach it now?
Well, it's actually, Sonia, to be honest, a pretty Boolean scenario at this point in time. There is 0 or 1. So it's like a big event risk. It all really depends upon whether Rana Kapoor lands up getting a 3-year extension. So, because even a 1-year extension is going to be viewed with serious suspicion by the market, because what exactly Mr. Kapoor has done for him to get only 1-year extension, whereas all other CEOs have landed up getting 3-year extension, right? So there will be a lot of suspicion. So the only way the stock does necessarily well is if Mr. Kapoor lands up getting a full 3-year tenure. And that is very critical for stock performance, to be honest. Our base case expectation is that the divergences number and all should be low, but then all those things are secondary to be honest, to Rana Kapoor's appointment.
Okay. The herd now is with the corporate lenders, that is SBI, ICICI, Axis. You would back them all?
Definitely ICICI and Axis. SBI, I'm still not pretty sure. We do have a neutral rating on the stock, mainly because, Lata, what I'm trying to argue is that there are 10 other PCA banks. So who else? PNB is also in a bad shape. Bank of India is also in a bad shape. So there is a slight possibility that SBI may be forced to acquire, or at least in terms of a portfolio buyout, right, which was talked about, like IDBI's bank bad loans going to SBI. It could be some of these PCA banks bad loans going to SBI's balance sheet, not through a consolidation, but just like a portfolio buyout. That's the reason I'm not very confident about recommending SBI. ICICI Axis, yes, because the favor is away from, rather in the sense the flavor is more towards these corporate-oriented private sector banks than the retail-oriented private sector banks. You can already see that in the underperformance, right? HDFC, Indus and Kotak, all of them have underperformed ICICI and Axis over the course of last couple of quarters out or so.
Okay. And finally, I wanted to ask you about NBFCs. Obviously, their big year was 2017. Now higher cost of capital, but what would you pick?
Yeah. Well, actually, Lata, I'll go underweight on the entire NBFC sector, because my view of liquidity is quite different from what the market thinks. I think liquidity conditions will become very adverse in the second half of this financial year. Remember that, of course, we know the second half is usually a very tight year, a tight half in terms of, generally the government borrowing calendar or the bank's balance sheets, or in general, seasonally a tight half. And this time it coincides with, of course, a weaker rupee, and at the same time, 2 state elections and 1 general elections. And typically during election time, the cash in circulation significantly goes up. So it really is a pretty disastrous combination from a liquidity standpoint, and I think RBI's OMOs have always happened with a lag. So brace yourself possibly for even an inverted yield curve in the second half, where shorter term rates can spike even beyond 8.5%, to be very honest. And in that environment, the NBFCs significantly underperform. They underperform whenever the yield curve goes inverted, and I do think that in the second half we can see a situation where yield curve lands up being inverted.
Okay. Suresh, we leave it at that. Thank you so much for joining us. So that's the word coming in from Macquarie. They wouldn't touch any of the PSU banks now because of all the merger stress in provisioning, incremental pressure, etc. that we would see.
I'll just make one more point here. Swap ratio is going to be very interesting here, and my sense is that price, the date will be important. And what date, you
Absolutely, record
decide
date,
that,
yeah.
Suresh Ganapathy also said. Also, it's not necessary that it would be price to price. Bank of Baroda shareholders perhaps would get a bit more due than, the shareholders of Vijaya Bank and Dena Bank, because it's the, the bigger bank. So that also
the market is
an
guessing
important
the
point.
other way. They have not really hammered Vijaya so much, so they expect that it'll get a better deal.
Yeah.
They are expecting only BoB to get a bad deal.